Andre Knight is back with more expert analysis. So what are we going to look at today?
Hello, Peter. This week I'd like to follow up on the Euro-Swiss. This is the pair that we've been following for a couple of weeks now. And if you recall, we were watching a major reversal to the upside on the monthly, weekly, and daily charts, ending a 4-year trend. Now, that long trade did lead to some profit, about 140 pips, but we did have to exit early ahead of our intended target, mainly the euros being weighed down by increased uncertainty coming out of Greece. They went from denying that they need a bailout at all to asking the IMF to increase the size of that bailout. Also, there's added uncertainty coming now from Ireland and also Belgium due to a political stalemate. So that's been weighing heavy on the euro side of the equation. I want to show you guys exactly how we knew to exit and take profit ahead of our target, what the signs were that led to continued downside, and now what signs are appearing now to show that it might be turning back and getting ready for another up retracement. So let's take a look at the charts. Here you were seeing the 4-hour chart that we left off on last time, and you can see where price came in to form a bottom for several candles in a row, and in the process also formed a divergence. If you recall, that's when price makes a lower low, but our indicator fails to make a lower low. Okay, that was our bullish divergence, and then we got several candles just kind of chopping up and down in a row, and then we had this beautiful open outside and above the range that was established. That was our cue to go in, and you can see the next vertical white line marks where we got out, because we had a spinning top, a candle that represents indecision in the markets, followed by a candle which failed to open outside and above the top of that cross. That was our indication of reversal, and that's where we took our profit early. We netted a little bit over 140 pips on this one. If you zoom in on the hourly chart, you can see this area defined even clearer. Okay, here's that range bouncing up and down. Okay, we had the 4-hour candle that opened outside and above, but the first 3 hours we were in decline, and so was our indicator. Then at this point, our indicator, and you can draw trend lines on indicators by the way as well, not just on price, our indicator not only formed a zero line rejection, which is a very bullish signal, but it broke the prior trend line that was established with the prior two tops. Okay, so it was at the start of this candle that we went in, and the exit's pretty obvious. I marked where it was on the 4-hour chart, but you see the 1-hour chart gave us several indecision candles in a row, while itself also forming a divergence pattern. Now we're zooming out to the daily chart, and you can see the entire move down that followed until price once again formed a lower low, and our indicator failed to follow through and form a lower low as well, giving us a bullish divergence and again a spinning top candle. This downside trade was worth about 430 pips, by the way, and now facing a divergence, an open outside and above the cross of the spinning top, we're in bullish mode once again. What I would love to see is for price to come down and touch 22.48, that's our weekly central pivot point for this week, and hold that level as support. If it does so, my next trade is going to be from 22.48 up to the daily 21 moving average, which is at 24.55. If it works out, that would be another great trade, netting us about 195 pips. We'll see you next time.
Once again, a great insight from the founder of FXKnight.com. Remember, he has been working in the financial markets for more than 15 years, so he certainly knows his stuff. As ever, Dukascopy TV will continue to provide Forex traders with specialized FX programming. Goodbye for now.